All right, team, we are live. My voice sounds weird today. It is what it is. I wasn't going to make a video, but does it really matter what I sound like? It really doesn't. At the end of the day, there's either value here or there isn't. And, we keep it very real on this channel. Market's slowing. Market's slowing. And few ways you can tell that when you're in my shoes as a lender. Number one, Monday should be the busiest day of the week. Sometimes it's Tuesday, but Monday should be insane. It should be a hectic day. I've trained my whole family to understand this and to leave me alone on Mondays and all those things. Today was super quiet. Super quiet. Now, we had offers that went out this weekend, and we have, in fact, one that just got accepted. There's another one that looks like it will get accepted. So there's still activity taking place, but just the quantity of activity seems to be dwindling. So today, I'm going to share a few different things with you. I'm going to show you both sides of this coin, and then we're going to look at some of what I think is probably the most important data to look at. And then we're also going to take a look at the market just to see it's lagging data, so I don't love it, but we're going to look at it because at least if we're checking the same things, and that's one of the most important things about checking data, checking graphs, checking websites, checking news, always look in the same places. So you know what par is. This is a very, very important thing to do for research purposes. Okay, so right now the market's slowing. I had an agent just call me, and he said, "Hey, what's going on?" Actually, I had an agent text me as well today. "Hey, I've got 2 listings. Nothing. No offers." They're both in Escondido, like around $1 million. So for that one, it's kind of like, I think that just might be, that $1 million Escondido buyer might be harder to come by. That there's certain pockets that are going to be a little bit more difficult. We talked about how some of those areas that were sort of unsightly to us before the housing boom, those areas were just selling like hotcakes too. Remember when I said those areas might quiet down a little bit? So it's the areas that were quiet before that we were surprised that they weren't quiet anymore. Those are the ones that are going to quiet down first. Okay. And so it shouldn't be too much of a shock there, but some of these are really nice houses. In fact, my buddy just called me and said, "Hey, I've got a legit casita, house, essentially a 2-unit in Esco. It's not updated. It's not super fly, but it's the right price. I think it's $785. And he has 1 week offer on it." And I'm like, okay, that's interesting to me. So we're seeing some of those things. And also recall, the number one thing I said to pay attention to right now is sentiment. Forget the numbers, forget the stats, even the data that I talk about that should make us all feel comfortable. The sentiment is the key. The sentiment has been, crafted and controlled by a select few to try to be very negative towards real estate, to tell people to watch out, watch out. Rates are rising. So there's a lot of that stuff that's going on. You say, well, why is that the case? This is why. This story right here. By the way, Derrick Evans, NMLS 155010. VA home loan specialist. Call, text me if you want to buy a refi. Oh, by the way, officially 0 refinances in the pipeline. So if you know anyone who wants to, refi for a higher rate than the one they have now, hit me up. In fact, this is the best time to hit me up ever. Some people reach out and they're like, "Oh, I don't want to bother you, but bother me. What are you talking about? That's what I'm doing. This is what I do. Bother me." Okay, I'm gonna get myself out of here and let's get down to the nitty gritty. Let's go this guy. Let's get rid of this guy. So I'm gonna come to this in a second. That's a town in Florida. We're gonna look at that story in Florida. This is from CBS, 10 News. I think it is CBS, right? No, ABC. 10 News. Housing market shows signs of cool down. And what's really interesting about this is the headline looks sort of negative, but when you read the commentary, remember, I'll say this forever, read the articles. See if there's any substance. Don't buy the headline. What they're saying in here is that, Zillow did this analysis. They have other people who, like Michelle Silverman, who's a realtor with Coldwell Banker. There's other commentary in here. But mostly what you see in here is that there's talking about how this makes it better for buyers. This is a better time for buyers than what we've seen recently. And I think that makes sense. Even though rates have gone up, it's not the linear equation that Meet Kevin thinks it is. It's just not. This competition for sellers is good for buyers, all that stuff. Meet Kevin thinks that, well, if rates were, since rates have gone up this much, if you're buying this much house, you can afford this much less, which means the new price should be this. That's not how it works. That's not how it works. And we've chronicled this. When interest rates spiked hardcore because of rampant inflation back in the late 70s, early 80s, we've looked at this before. What happened to real estate values? Let's go back. Here's what happened during that time. That's what real estate values did during rampant inflation in the late 70s, early 80s. This is the time frame that everyone is comparing. There was 2 small pullbacks, one for 3% here and one for 4% here. And that's it. And other than that, it's just up only.
All we want to do is pump you up.
There's logic, and then there's data, and then there's the all-important thing that's very difficult to gauge, which is sentiment. Sentiment is huge. So basically what they're saying here is, hey, seems like things are slowing down a bit. That's good for buyers. Okay, great. Don't forget about who the biggest buyers are. Don't let stuff like this go unnoticed. Goldman Sachs backed firms buy an entire Florida community for $45 million. Now, I did rough math on this. I think they're going to cash flow about 400 Jeepers a month. Remember when I was telling you about how Wall Street firms are buying real estate, not because they want to buy real estate, but because they really want to buy bonds, but they know bonds aren't worth a shit. And there's this massive, massive bond market, $120+ trillion, where people are gone for fixed income, for guaranteed returns. And it's just not that reliable, especially in a hyperinflationary environment, which is what we're in, a stagflationary environment, which we very much are in. So what is the smarter thing to do? The smarter thing to do is to just buy real estate directly. Now, Wall Street prefers to do it this way. They'd rather buy a whole community than they can control. If you want into this community, if you want to live here, this is what it's going to cost. We control it. Trust me, it's been my worst nightmare. It has been confirmed now. Multiple people have told me, long-term roadmap, many big firms, we're talking BlackRock here, we're talking the big boys, Goldman Sachs, they want to own it all.
Yeah.
They want every door. And it's times like this where they are going to slide in there, right? Because they don't care about interest rates. They're paying in cash. They are paying in cash money, and you and I are trying to get a loan to buy a house. So that is what's going on. And this stuff because this comes up all the time. I don't talk about it every time it comes up. I should. That's how important it is to understand this market, and probably is the greatest threat to the real estate market. Should one of these Goldman Sachs backed firms, let's say, capitulate for some other reason, let's say they were, all in on Terra Luna, crypto or something like that, they get margin called on that, and then they have to sell all the houses in bulk to some other firm, and it just mashes comps. When Wall Street is involved, it creates the potential for problems. But this kind of situation, this isn't a flip. They don't want to flip it. They don't want to sell it. They want the income. They want the income. And so if they should, and this is very important to note, if they should need to sell this $45 million portfolio, they wouldn't sell it on the open market. They wouldn't sell it as one house. It would not be a comp for anybody. They would sell it to another firm that was better, that was in a better cash position, that would want that cash flow. And probably at a discount, but it would never hit the MLS. So while there is a concern that, these guys will just throw, call 100 realtors, or 120, it's a 120 unit complex, call 120 different realtors to throw these on. No, not how it works. And that's a worst case scenario. Now, Ben Bernake finally came out, and he's got a book to sell, but the Fed's slow response to inflation was a mistake. Dipstick. Why are you saying that now? Why weren't you vocal about it when it was going on? Why weren't you going, hey guys, might want to pull the trigger a little sooner? Do something. Sitting on your hands, transitory, let it fix itself. With inflation? What's the matter with you? That's what they did. So finally, Bernake comes out, right? All these rear view dogs. Rates today, mortgage bonds up 19 bips, not bad. It's beautiful right now. I'm telling you, I don't know that a reversal is on the way, but man, I like the way this looks. Boy, it's just setting up beautifully for reverse head and shoulders. One of the best patterns you could see for a price to go higher on a chart. And we're staying in this range here for the head, which is great. I like it. I like it. Now, there's headwinds. Don't get me wrong. There are headwinds. I just don't know if there's any big inflationary headwinds coming, things we don't know about yet. I don't know if there's any of that left, but there could be. So things looking good here. Good day to lock. Good day to lock today. Tomorrow could also be a good day to lock. Could be better. At some point, we've got to get up here and then, kind of go sideways so that we can make this shoulder over here. So maybe tomorrow's the day we break through that. Could be. I'm still working and operating on the need to lock ASAP situation. All right, let's take a look at some data. I got to take a drink. My voice is killing me. Okay. Looking at San Diego, market action index, first thing to look at, was at 95 previously, now at 91. Remember we said how it heated up significantly, and then it felt like that was just a little too much. That's kind of what's going on here. We're peeling back. We're still at a 91. Very strong seller's market. Very strong seller's market. Couple things that we're looking at here. Price per square foot, we're going to look at closer. All right, that has been steadily increasing. Average days on market, steadily decreasing. Numbers of price reductions, increasing. Okay, that's not bad. What would be a shame, what would be a mistake, is if sellers weren't reducing their price and the homes weren't moving. That would be a problem. The fact that sellers and agents out there are experienced enough, even after 2 years of no price reductions, to be able to go and say, hey, we need to drop the price if we want to move this thing. That's a good sign. So don't see that as being terrible. Just so that, hey, we're trying to figure out where the market's at. Where is the market at? Another agent texted me today. He said, hey, my buyers are just MIA. Like, what's going on? I kind of felt the same thing. I texted all my pre-approved buyers on Friday. Just, simple commentary. Hey, I'll be around over the weekend if you want to calculate payments or run through anything. And I think 5 people responded out of like 45 people who are pre-approved. So just not a lot of oomph in the buyers right now. And why is that? Why are we not seeing the oomph from the buyers? I'll show you why. I think you can see inventory here also creeping up. We're going to look at that closer. Rents just insane. I think the reason is because buyers want a deal. Every buyer wants a deal. And right now, buyers don't feel as a whole that they're getting a good deal. That's what it is. This is also the same reason why people who have bought, people who own now already and have for a year or two, feel like they got a great deal. It's one of the reasons why there's no way they're going to capitulate. There's no way they're going to sell out of fear. Meet Kevin is just so wrong about that. So wrong. Has no understanding of what actually causes people to make those decisions. Probably because he's never been in that decision himself. Never been in those shoes. You don't just sell your house because you think it's going down in value. No. You have to have a plan B that's better than your plan A, and you usually have to feel like you didn't get a very good deal, which people who bought a year or two ago feel like they got a great deal. The people who are looking to buy right now, maybe not so much. I'm running out of voice. Okay, so we can see this retreat on the price per square foot. It has expanded itself up. It gets away from the 90-day average, and then it comes back. And it just keeps doing that over and over and over. And right now, it's pretty much, we're just above the 90-day average. $710 per square foot. $710. That's so wild. I remember when stuff before the crash was priced at $500, and people were just like, they were literally like, you need to commit this listing agent to the insane asylum. They were truthfully writing letters like that. And look at us now. 500 was way back here. Way back here. But look at how steady and how smooth that is. It looks good. It really does. Inventory. Inventory creeping up. Note that the shorter term average has started to really move there, and you're starting to see more inventory, but still extremely low overall. And that is probably not going to change. So if the market does correct with a very low inventory, I don't expect much of a correction. I would say, we expect one of these type of corrections. By the way, we're looking here. This is Q3 1979 is what we're looking at right here. There's a 3% drop right there in Q4 1979. This is when the really significant inflation started happening. In 1979 is right here. Okay, Q4 is right here. So the inflation is really happening and rates are just spiking. Okay. And then we had a little pullback here. It was about 4% in Q1 1982. So you go back here, 1982, right here, when inflation was at its absolute peak and had interest rates had gone from 7.5% to 18.5%. You got a 4% pullback. And so these buyers, what I'm saying, the reason I'm bringing this up, if you were a buyer in that fear range right there, you got rewarded very quickly and very handsomely over time. We very well could be in one of those situations right now. That's sure is what it feels like. I mean, just imagine, if rates get better here, if maybe the worst is behind us, maybe the next inflation report is positive. Maybe it's just flat. Just flat. Even if it were just flat year over year, month over month even, that would be enough to show some positivity. So it's definitely a confusing market right now. And I know that when people think about real estate, we think about it from a feast or famine perspective, that it's either crushing or it's getting nuked. And there's a lot of in between. And what I really want to stress is that there is a lot of in between in these markets. So know that if we are going to get to the point of a crash or something like that, there's going to be a lot of warning signs. There's going to be a lot of time. People are paying very close attention now. If I think back to the crash of '08, people weren't paying attention at all. We didn't have this much data. We didn't have like random homeowners being like, oh, I have an opinion on the real estate market. It wasn't like that. There's a lot more eyeballs on it. And that actually helps prevent crashes. It does. Because the people who are bearish right now and they're saying, yeah, real estate, I don't know, sidelines. Okay. Well, that's not bad. That helps keep a crash from happening. If those people had stayed in and they all stayed in and they were all bought and we just kept buying higher, higher, and higher, and higher, eventually there would be a bubble that bursts. If we can consolidate prices here, let's look again. Let me zoom this back out. This is real estate values, okay, in the United States. Take it all the way back to the 60s, okay? And you'll notice that there's certain points, like right here, where prices consolidate. Just kind of go sideways for a while, and then move higher. And then we have the crash. Now the crash, oops, sorry, I'm in the way. I do that all the time, and it's my biggest pet peeve. It drives me nuts. The crash, we lost 20%, top to bottom on average in the country. Some places obviously got hit harder than that. We lost 20%. That's the only time you can see a very significant short-term move. And that's from Q1. That's about a 2-year move. Because it took 2 years to take all that 20% out. 2 years. These things don't happen overnight. And you get a lot of warning signs. There's lots of opportunity in the middle. I do not think that anything even close to that is happening. I think what we're going to see is more like, you see now when I zoom out, look at these little dips here. That little 3% dip doesn't look like much there, does it? That 4% dip doesn't look like much of that. That's what I think is happening. This is the only period of time, late 70s, early 80s, that we have to compare to right now. So that's the best guesser we have. Back then, you did not have record household wealth, even though you had rampant inflation. We have record household wealth. We also have record credit card debt. We have record student loan debt. So all those things are in play. But we have a lot of people with a lot of money. And I don't know if that's exactly how it was back then or not, but we definitely have that now. So these things looking the way that they do, is people are saying, oh, the inventory is spiking. It is going up. It is increasing. But look at where it is. I mean, as of, how long ago is this? A year ago? Maybe a little more than a year ago? We had never seen inventory this low as it is right now, today, even after inventory has quote unquote spiked. So we just got to put some of these things in perspective, okay? And just don't forget, keep an eye on what the big money is doing. This is something we've always got to do in every single thing that you invest in, every single thing that you care about putting your money into. Pay attention to what the big boys are doing. And right now they're buying real estate hand over fist, and they have been for quite some time. And I don't see that stopping. All right, guys. My voice has had it. If you need me, I am extremely available. I've never been this available. Never been this available before if you need help with a home loan. A quote, refi, buy. Probably not refi, but that's all right. You want to buy, you want to get pre-approved, whatever. I want to get a second opinion on a pre-approval that you've gotten. shoot me a text, give me a call, send me an email. I'll be happy to help. You guys have a great night, and I will see you soon. Take care.